Hello everyone, this is Juan Sarmiento and today is Friday, February the 17th. Okay, I don't really have any new trades. Let's take a quick look at the markets here. You can probably with the SPY, the VIX here, get an impression that we're at the bottom here. This will be a good time to find good trades, but the markets have been very indecisive, let's say. Let's take a look at the SPY. It's mostly moving sideways. Okay, so it's now, I think it's gonna go down to this point and then rally up. But I might be wrong. It might, if it breaks down, then volatility will take on and um, give us good profits. So let's hope that something happens, at least the volatility. But I wouldn't be unhappy if it rallied very strongly to new highs. Okay, let's take a look at each trade and make the adjustments we need to make as an expiration date that it is today. I have organized my trades alphabetically, so let's start with Adobe. Adobe has been breaking down, the volatility has spiked. Let's take a quick analyze here. And you see that I have puts that expire today, and these are way out of the money, so I don't really need to roll those over. I can simply add puts at the 350 range. So let's say create analyze closing. That's not what I'm going to do. I'm going to say analyze opposite. It's a quick way to organize here my puts at that expiration, and I'm going to sell one. Okay, one, we have two puts here, 350, unlock it, and that gives me 11.75. That seems a lot. I don't know why. Okay, but in any case, it's giving us a lot of cash back. Confirm and send. We ignore this. You can see it's open here and now filled. And you can see that I have my regular trade, and I have a roll up, and now I have an additional put. So we have several legs here that oh, wait a minute, Adobe. Okay, here we go. Okay, as you can see, we have 1, 2, 3, 4, 5, 6 legs. This put will disappear, so you can discount that one. We have one put and one call. We have one call roll up at 375 there, so that's good. We have all of them here, so we can hide the position and let the simulation tell me how much money I have made, and here it is. Okay, this put, yeah, I have made close to $900 with that, and my calls, I mean my options, are expiring on March and the long ones in April, so there's plenty of time. What is going to happen is this put here, the February, is going to disappear, so you can pretend that that's closed. Okay, and it says for 4 cents, but it really will disappear. It's not, 350 is not going to happen. It's not going to go down to 350, otherwise this put could appreciate. But assume there is going to be zero by the end, and this will be my trade with 14 deltas, which is pretty low. All right, and that's good. All right, I'm going to leave the trade the way it is right now and make any adjustments going forward next time. Let's go to AXP. It looks like I sold one of them. Let's go to the monitor tab, account statement. Let's go some days back, and then, yeah, I don't know why I have 6. I have only 4, not 6. Yeah, okay, that's the real price. If I had hide the position, you see that I have June is the expiration, March of the longs, March is the expiration of the shorts, and it looks pretty good for $100. Yeah, I don't need to change anything here. We wait until we get closer to the March expiration before doing any changes. The stock might go strongly down, strongly up. If it goes strongly down, perhaps the volatility would increase. If it goes up a little, that would be great. But if it goes strongly, that might be not so good. You see the volatility here is around between 20 and 29. Is pretty high volatility for the back month. Take a look at the chart, and the volatility is fairly low even for this stock. Yeah, and it's been moving quite strongly here, so yeah, that looks good. I'm gonna leave it alone. Let's go to COF. Take a quick look at the chart first. It's been pulling back, but I think it might reverse and go higher. Let's go to the Analyze tab. 3 and 6, okay, and we have, all right, so you can see by seeing the current simulation of the current trade, it cost me $30.20. If I were to buy it, sell it, I will get a credit of 28.22. You want to see how I did that? Well, all you have to say is analyze the opposite and then unlock it so you see the current price. I am losing some money on this, but not a lot. Hide the simulations and hide the positions, and you see how much money I have been making or losing. I'm losing $594. Okay, so let's show it again, and these are expiring today. All right, so I'm just simply gonna close because it's not making money and no point in expanding this when it's a loser. Okay, I'd rather close, and if I lose my $600 rather than more and more and more. Okay, so let's create the duplicate, confirm and send. You can unlock it and see if it's going to sell at, let's say, 28.22. It's a good price, and send that, and I would adjust it if it doesn't close within 5-10 minutes. Let's go to CRM, hide the simulations for a minute, and you can see here that this February is what expires today, way out of the money, so we can sell the March puts. Analyze closing. Let me explain that in more detail. Let's change that to puts. Let's change that to selling short, and we will get to 20. Okay, this is what is happening here. You see 1, 2, 3, 4, 5 legs. Let's hide the simulation for a minute. Why do I have 5 legs? Because I rolled up a call. You see how we have 3 here instead of 4 like the puts? That's because I took one of these calls and I sold it while buying the 175. And buying the higher strike price, it means you collect some money. Okay? Why? Because you sold the expensive call and bought a cheaper one that was slightly out of the money. In that way, you take profits. Okay, that's why we have 5 legs. Also, you see that I have this put expiring today, and it's way out of the money. It's a 150. And so that means that instead of rolling this out to March 50 like I did with the calls last week, I'm simply going to sell the March 150 put. This one today will expire. Of course, you can buy it back if you wanted to analyze closing, and that will cost you a penny. Okay, you might say, well, yeah, who cares? It's only $1 or two. Okay, but in any case, you would sell the March, or you can do a rollover. I usually just let it be. It's just too way out of the money for me to worry about it. Okay, and in a few hours the markets will close and this put will not appreciate. If you feel that, well, anything can happen, well, then buy your junk back, as they say. And there it is. Okay, now I have 1, 2, 3, 4, 5, 6 legs, because this put will disappear. These two puts will disappear, and thus I end up with that 10 delta, and that I'm happy with. Okay, that way we just collected a few bucks. 1945 for the, 220. 1945 is the calls. You can close these calls here and you'll get $17 for it. You would pay $17, so you would collect a couple of dollars for that. I'm gonna leave it, of course. Let's go on to Cisco. Okay, Cisco, we have this put. It's gonna expire, worthless today. I don't think I can. I put it to sell for a few pennies, but I don't think it's gonna work. Let's look at it here. I have it here for 0.95. Okay, let's change that. I've been trying to sell it all week long and it hasn't happened. So let's put that 0.9. I don't think it's going to fill, but we can adjust that in a little later. Okay, let's move on to STX. Analyze that. So we just got 9 cents there. All right. Here you have the STX, and they expired March the 30th. If you want to see what the position has made you, go to the Monitor tab, Account Statement, and check the trade history and copy that. Analyze duplicate. Analyze trade, sorry. Let's erase everything else so you can see what I'm doing. This is the trade. It's simulated so I can get the price, the debit. You can hide the position and you see that it's identical. The simulation that I just made compared to the actual position. So hide simulations, that's $695. Hide position, $695, exactly the same. If you say analyze opposite, in unlock, you see what the difference is, and we have $670 of profits so far on that trade. But because we are in March, the next expiration is March 3rd, there's plenty of time. I don't need to do anything. Let's move on to TSM. Okay, TSM, according to this, has an expiration. Let's go to the Monitor tab. I already rolled over the calls. Okay, and this is our trade now. And of course, the put will expire today at 90. Let's say show all. Yeah, 90 puts. So we need to do the puts. And we are right there at the edge, which is been a lucky shot that TSM is very close to the 90. So that's time now to do the, in this case, we need to do the rollover because we are too close to expiration. Too close to the strike price, is below already. So if I don't do that, I end up with a long stock on Monday. So let's analyze this trade and change from call to put. Okay, unlock it, and we are gonna get $310 for that one. Times 6. So create duplicate, and you would see that we get 1800 for that, 1860. And then we would adjust the current trade to create a new one that includes those two credits. Okay, all right. So what I would normally do then is go back to the monitor tab, activity and positions, and make whatever adjustments I need to make. COF, okay, I could reduce the credit, cancel, replace, open the lock, and try it for 2812. Same with the TSM, cancel, replace. Now we are already offering lower, so lower a few cents. We want this to get filled. Okay, one more time. Cancel, replace. 1, 2, 3, 4, 5. And the TSM, cancel, replace. 1, 2, 3. Okay, that's the natural is it should immediately automatically fill, and it did. Okay, so we fixed the TSM now. Let's wait on the COF, capital 1. Okay, now we have everything we need here. Okay, so we're gonna create the new trade as it is here. Analyze trade, and we are going to set our shorts now, change them to March the 17th. That's the new trade. You can unlock it, disregard it, but here you have now, let me show you the calculation that needs to be done. First, the cost of the original trade, that's 16.26 times the number of lots. How many lots do we have? 6. And I mean by that the shorts, if you have 12, the double the number of contracts on the long side, in this case 12, 12, and 6 for the short side. Okay, so what do? We multiply that by 600. That is our original price in actual dollars. Okay, now we are going to reduce to that. You can add those two because they have this exact same number of contracts as the shorts over here. So you can add those two numbers, 1.7 plus 3.05 equals 475, and we multiply that as well by 600 because you have 6 lots in both cases. And so this is how much credit we got from those rollovers. Okay, so we're gonna clear the memory and just add as a negative, and then we add, let's clear that, let's memory recall 285. Okay, so we're gonna add, let's clear that, get this number back to original cost 9756, from which we're going to subtract what we had in memory. Okay, so you simply can go to this memory plus, we're adding this to the memory, and memory recall gives us the new price. Okay, and because the new trade is also a multiple of 6, we divide that by 600 and gives us the new price 11.51. Copy that and put it over here. Okay. So how do I know it is the same trade? Well, look at this now. Our profit is 13 excuse me 13.14. Okay, so deselect all, select the new trade. 13, yeah, it's the same trade. You can look at the Vegas, the deltas, for example. 34.30, 33, it changes as we go, but okay, so that's a new trade, and all you have to do now is analyze the opposite and unlock it, and that gives us the comparison of what we had after the adjustments. But that's the new trade, and this is the new trade to sell. You can close simply by sending this sell order or the opposite trade. I'm not going to do that. I'm happy with that trade, and so we will go to the next expiration, which is in March 17. If something dramatic happens, I might change my mind and close it earlier. Okay? But for the time being, I'm happy with that. Having said that, I think that's all. Let me take one more look at this. Cancel, replace. Let's lower another 5 points or so. And I will keep doing this until it gets filled, because I don't want that trade anymore. Okay? That's all for today. Thank you very much for joining me, and see you next time. Bye-bye.